In the past, investing was all about profit. Investors focused on returns, market trends, and financial metrics, often overlooking environmental and social impacts. Today, a new approach is changing the landscape: ESG investing. ESG stands for environmental, social, and governance, and it represents a strategy that evaluates companies based on sustainability, ethical practices, and corporate governance. ESG investing is no longer a niche market, it's a global movement. From pension funds to individual portfolios, green funds, and socially responsible investments are reshaping wealth creation. Companies with strong ESG practices are attracting capital, while those that lag face scrutiny and risk. But why has ESG become so powerful, and how is it changing the way money flows? Let's explore the dynamics behind green investing and why it's transforming global finance. Understanding ESG investing. ESG investing evaluates companies beyond traditional financial metrics. Environmental factors include carbon emissions, resource management, and climate impact. Social criteria assess labor practices, community engagement, and diversity. Governance considers corporate ethics, transparency, and executive accountability. It is about long-term risk management, brand resilience, and sustainable profitability. Growth of green funds. Green funds have grown rapidly in the past decade. Mutual funds, ETFs, and index funds now offer dedicated ESG strategies, providing investors access to portfolios focused on sustainability. The influx of capital has forced companies to take ESG seriously. Firms with strong ESG profiles often enjoy lower borrowing costs, higher valuations, and increased investor trust. In contrast, companies with poor ESG practices risk divestment and reputational damage. Green funds are redefining wealth by linking profitability with responsible business practices, demonstrating that sustainability and growth are not mutually exclusive. Attracting millennial and Gen Z investors. Younger generations are driving ESG adoption. Millennials and Gen Z prioritize ethical and sustainable investments, often willing to accept slightly lower returns in exchange for impact. This demographic shift is reshaping capital markets, encouraging companies to adopt ESG policies to attract investment. As these generations inherit wealth, their preferences will continue to influence the flow of capital, making ESG an increasingly dominant force. Investors use ESG analysis to identify companies with strong risk management practices. By integrating ESG into investment decisions, portfolios are better protected against long-term shocks and volatility, blending ethics with financial prudence. Performance of ESG funds. A common misconception is that ESG funds sacrifice returns. In reality, studies show that ESG investments often perform on par with or outperform traditional funds over the long term. Companies committed to sustainability tend to be forward-thinking, innovative, and efficient. They attract loyal customers, retain talent, and avoid costly legal or environmental issues. These factors contribute to stability, resilience, and long-term profitability, making ESG funds attractive not only ethically, but financially. Corporate incentives and ESG compliance. As ESG investing grows, companies have strong incentives to improve their practices. Firms invest in renewable energy, waste reduction, employee welfare, and ethical governance to attract capital and maintain competitive advantage. ESG compliance is no longer optional. It has become a key differentiator. Companies that fail to adapt risk losing investors, customers, and market share. In this way, green investing is driving real-world change in corporate behavior. Climate change and environmental responsibility. Climate risk is central to ESG. Investors increasingly scrutinize companies' carbon footprints, energy consumption, and sustainability plans. Firms addressing climate change proactively are seen as lower-risk, forward-looking investments. Green funds channel capital into renewable energy, clean technologies, and environmentally responsible companies. This not only supports sustainability, but also positions investors to benefit from the global shift toward a low-carbon economy. The environmental dimension of ESG ensures that capital plays a role in combating one of the most pressing challenges of our time: social impact and corporate responsibility. The social aspect of ESG focuses on human capital, diversity, and community impact. Companies with strong labor practices, equitable policies, and community engagement are rewarded with investment. Socially responsible firms often outperform in retention, productivity, and brand reputation. Investors use governance criteria to evaluate board structures, executive compensation, and corporate ethics. Companies with strong governance are less likely to experience fraud, mismanagement, or shareholder disputes, making them safer investments. Governance ensures that ESG principles are implemented effectively and sustainably, reinforcing the integrity of green investments. Regulatory support and government policies. Governments and regulators are increasingly promoting ESG practices. Policies incentivize renewable energy, emission reductions, and corporate disclosure, creating favorable conditions for green investing. Public support strengthens the financial case for ESG funds, as companies adhering to regulations may face lower compliance costs and gain preferential access to capital. Regulatory frameworks also enhance transparency and standardization, making ESG metrics more reliable for investors. Government action amplifies the influence of ESG, turning ethical practices into financial opportunities. Challenges in ESG investing. Despite its growth, ESG investing faces challenges. ESG integration in traditional portfolios. Many traditional funds now integrate ESG criteria alongside financial analysis. This hybrid approach combines conventional performance metrics with sustainability factors, creating portfolios that balance profit and purpose. Institutional investors, including pension funds and endowments, are increasingly adopting ESG integration. Global trends driving ESG adoption. ESG investing is not limited to one region. Globally, investors are responding to climate goals, social justice movements, and corporate accountability initiatives. Europe, North America, and Asia are seeing rapid growth in ESG-focused funds. International standards and reporting frameworks are emerging, helping investors evaluate companies across borders. The global nature of ESG adoption ensures long-term wealth creation through ESG. ESG investing aligns long-term value creation with ethical and environmental responsibility. Companies that prioritize sustainability are positioned to benefit from regulatory trends, consumer preferences, and technological innovation. Investors in ESG funds are not just seeking immediate returns, they are building wealth that is resilient, responsible, and adaptable to future market conditions. Impact investing and social responsibility. ESG funds often overlap with impact investing, which targets measurable positive outcomes alongside financial returns. Investors are increasingly focused on metrics like carbon reduction, social equity, and governance improvements. This approach allows capital to drive real-world change while generating profit. The future of wealth is green. ESG investing is transforming global finance. By prioritizing environmental responsibility, social impact, and ethical governance, regulatory support, and global awareness of sustainability challenges, companies that embrace ESG principles benefit from access to capital, brand strength, and long-term resilience. For investors, ESG offers the chance to align profit with purpose, ensuring that financial growth supports a sustainable and equitable future. In the modern era, wealth is no longer just about money, it's about impact, responsibility, and the legacy left for future generations. The rise of ESG investing proves that the most successful portfolios may be those that balance financial returns with the health of the planet, society, and corporate ethics. Green funds are not just reshaping wealth, they are redefining it.